Hey, and welcome to TSOB. This is a podcast for entrepreneurs who are interested in investing or starting their own funds. We are Adam Anderson and Zach Eikenberry. Join us to get a behind-the-scenes look at the relationships between founding entrepreneurs and the VCs that invest in them. When we last left our heroes in the venture startup space, they were rolling into a season of busyness where the Series A was coming and they must do all of the things. And then a lot of stuff happened and we're like, well, it looks like we're not going to record one of these for a little bit because literally every second of every day, it seems like you've been either talking to a VC, talking to, I mean, you were so busy that I had to go and win on our behalf venture summit down here in the Southeast. And look, what I want to say is that I don't know that it's that I won the event. It might be more that I carried the team is really what I wanted to put out there.
For those of you who had under 2 minutes before Adam Anderson bragged about himself, you win today. So I'm not sure what the spread was, but
it was 80-1. It was 80
to 1. You think the majority of people who placed a bet at the 2 minute line said Adam's under or Adam's over.
That's it.
So,
congratulations to all of you who won. And your prize is a t-shirt. That's actually the t-shirt Zach's wearing right now. You have to go get it from him. It's not a fight to the death. It's a fight to first blood. It's almost like so much has gone on that I don't even know where to start. But so why don't, instead of looking backwards and talking about some of the things that have happened, why don't we look forward and talk about, where we currently are? Because a lot of what I've experienced over the last month and a half has been hurry up and wait and mindset around things I cannot control. And so, we can dive into that, but bring us up to date. Where is Hook Security right now, and what's happening in the near future?
Yeah, so right now, Hook Security is in the throes of working a funnel, and so I did read that a venture firm they published out. They asked the last 5 companies that they led the Series A in. They asked them about their total funnel, and then they averaged it. And out of the last 5 companies that raised over $5 million, they reached out and talked to 68 VCs. I know that at the top level. And then it started to have itself all the way down, where on average it took 120 days and they had 3 term sheets.
Wow.
Out of 68, then that's the average over 5 to raise over $5 million. And I think that's the world we're in today. I also think most people, even VCs and investors, it's new for them to put so much due diligence up front before the term sheet. So for a while there, especially in 2021, term sheets were pushed around in order to, in a lot of ways, call dibs, support a company, signal to the founders that this firm is leaning in and serious and what have you. And so they were treated like very loose pieces of paper, because a founder might end up with 5 to 10 term sheets and then they just process through. So a VC knows that even if they put out a term sheet, they got a 1 in 5 chance of closing the deal. In Q3 this year, that just ground and flipped. So what investors are telling me, and what other, especially VCs who have early funds and new funds, their LPs are tightening. Their limited partners, the people who put the money into the fund, are tightening, have scrutiny. Some of them are having trouble with the capital call already. And you're seeing this extreme amount of due diligence in front of the term sheet now.
Right.
And so, I've never moved about my world attempting to time things. I am aware that timing in some research studies has more to do with the success of a company than anything else.
Sure. Timing and
Um,
luck.
yeah, so well, there's timing, and then there's usually successful founders, and they say successful founders is any sort of exit, but founders who get a 7 to 8 figure exit are very gritty.
Mm-hmm.
They push through it, they grind it out. So you end up with those two things. It's not about the idea, and it's not about how much capital you have. It's about the time on the market for that idea, and it's about the grittiness of the leadership. And grittiness could take the form of pivoting and a few other things as well. Um, so there is this idea out there that um, all success, the research, I should say, some of the people who have presented research on it when they do statistical studies, um, founders who are most successful are second time founders.
Mm-hmm.
And the vast majority of them have failed in their first endeavor. Or it's true that within the same company, they made a hard pivot. And so even though they're incorporated the same and use the same capital and infrastructure, they take it from one direction to another in a very hard, quick manner. And so those are the signals of viability and success when it comes to outsized returns and large exits, which is fascinating to me. So I'll bring this all around. What we're looking at today is even though that's true, and I do believe that we show up to the table with an extreme amount of grittiness and grind
Mm-hmm.
in the Hook story, and our willingness to pivot and evolve and change, in the fact that I myself am not just a second time founder, um, but in all regards, depending on how you measure it, I've started 9 companies, so but arguably 5 companies up to this point. And the number of VCs who have stopped looking at data and started treating the due diligence as credit underwriting is mind-boggling.
Yeah.
And
Yeah, but that
so
can be a
I'll
natural
stop there.
response, right? That could be a
Yeah.
natural response due to we don't know. So I should just really input a lot of data. Because if I know in my heart, if I give you a term sheet, I'm along for the ride, then I'm going to not want to give you that term sheet, because right now I am terrified or I'm highly concerned, right? Or more to the point, I believe most VCs are not highly concerned. I think that their LPs that invested in their funds are, and the
Mhm.
GPs that are guiding the funds are concerned.
That's
And
right.
that's trickling down. I think that it's not that the quality of businesses and companies are not there. I think that people are just a little bit frightened, a little bit scared right now. And until that, levels out, we're going to have these kind of behaviors. But I wonder if this is going to be a behavior that sticks, right? Kind of like the TSA. That was a reaction. It's still around. I wonder if heavy due diligence at a Series A before underwriting, before a term sheet is a new normal that's going to stick around for a while.
Yeah. That's a great question. And I think you're right. And I think most people know the due diligence, and I mentioned the credit underwriting process. Most people approach venture capital as an LP with these ideas of debt.
Hmm.
And so they treat it as debts owed and expectations of debts returned. And when you have that mindset, now there are some LPs who do treat it as 5% of my portfolio is high risk, high return, push the capital, make it work. I don't expect all winners, but I do expect a winner.
Yeah.
And that aligns with the good funds, and the funds are able to manage LP. Funds that do not manage their LPs and they're taking money from folks who have a different mindset of like, hey, I'm only going to write you this check for $2 million if I'm getting 20 back.
Yeah.
And then that stress puts on it's not about the pursuit of the founder or the pursuit of the idea or the pursuit of a market thesis. It's the pursuit of something I can underwrite.
Yep.
And that is, I think that I've seen that in a couple of firms. I'm still talking to a few. The idea that a number of MBAs from the right type of Ivy League colleges can somehow reduce the risk on a company by evaluating it as an investment banker, I think misses the mark. But what I'm optimistic as, to your point, it's going to correct. It can't, like, these deals that they do underwrite, and I've seen some of these portfolios with these VCs, there are no winners in there. There are defensible, risk-worthy companies in their portfolio, but there's no winners.
That's the key. That's the key. And I think that's the message that needs to be in front of some of these VCs. So Zach's going down to Atlanta, he's going to be on stage. And, I think everyone is in the mood for defensible, easy bets. But I think the challenge is going to be convincing them that the market that you're in has room for a winner who can disrupt it. And that you've already got all of your safe bets in your portfolio. We're inviting you to take a swing for the fences, and you might miss. We things can happen, but we have de-risked that swing as much as possible for that home run.
Yeah. So I think my point is that VCs right now don't know how to approach investing in outliers.
Correct.
And so,
well, yes, I love by the way, one of my favorite statistics is that the more MBAs you have in your venture fund, the poorer you actually perform. Like,
that's absolutely right.
That's just statistics. And now you can say, why is that? And I'm like, well, I don't know for a fact what it is, but maybe if you've been trained your entire life to de-risk and to be rewarded for coming up with the right answer, and you're put in a place where you have to make really, really insightful and good decisions based off of data that simply isn't there, that you're not equipped to pick winners. And if you keep going back to, well, I just need more info. If I can get all the info, I'll make a good decision. Because that's what happened with my tests back in college. And I was able to get the info and I answered the questions correctly. That's not how VC works. You will never have enough info. You will never have, look, if that's the game you want to play, go play private equity. Private equity, you've got a lot more data, still nowhere near enough that you can be successful without some kind of intuition on top of this. But yeah, that's fascinating. Yeah. And so
I think my favorite thing to ever read, there's a couple of anti-portfolios out there. So you can read up. I think I shared this with you on LinkedIn once. Somebody did a analysis of big logos, like who passed on Facebook, who passed on Snapchat, who passed on Airbnb, who passed on Uber.
Yeah.
And you can see their reasoning, which is really fascinating. There's one where this guy goes into a deep dive on why he passed on Snapchat as a seed. And Snapchat did everything right. So Snapchat showed user adoption, user growth, utilization within the app, etc. And these investors flat out just said, like, there is no way that young people and parents of young people will want a message that disappears. And these VCs were adamant that this was the dumbest idea they ever heard. They didn't only like pass on it politely; they put it down, and they
shit on it. These people shit on Snapchat.
Yeah, and they tried to get the Snapchat users to pivot. And
what? Oh my God.
Yeah, these were these were folks who were considering a bridge to Series A. So if they would have put in $1 million at the valuation, I think what Snapchat's like 14 billion today. They would have put $1 million. It would have been somewhere just south of 2 billion when all is said and done. 1
Yeah,
million to
but
2
who would
million.
want a message to go away? Nah, it's not good. Dude, I hear this so often. So I every time I'm on a call with a guy or a gal who's got this amazing new DeFi Web 3.0 machine learning, whatever, right? To pick your buzzword, and they're saying the thing. And I'm like, I don't understand what you see. In the back of my head, I'm like, but you do. And I'm not so narcissistic that I think I know everything. And so it's so hard to know, what are you going to say yes to? What are you going to bet on? And when I'm in that chair and there's a entrepreneur on the other side of the Zoom link or on this other side of the table, and they are talking to me, because I don't know at times, what they are talking to me about, I go back against two different things. One is, what is my fund's thesis? What am I good at? And what do I know? So you can have a great idea. You can come to me, but if you're not a cybersecurity company, or if you're not a space company, I will have very, very hard times processing it, what you're actually telling me. And the second thing is, what is my direction from my LPs? What is it that they are excited about? Because I need to bring deals back to my LPs to show them progress. Hey guys, guess what? We just invested in Snapchat. So I have I think the general venture fund model is a thing that can work. Mm-hmm. But for me, I'm like, no, I can't invest in things I don't understand.
And that's fair, right? Like, I think that it makes sense for VCs to show up with a map of some sort of marketplace or conviction or a thesis. They say, this is our map of the world. But if they're telling entrepreneurs where the treasure is,
yeah,
and they're in the wrong seat. You should have a map well enough to be like, yeah, I'm aware of that mountain range. Tell me more about it. And you're like, under that mountain range is this type of gold and these type of precious metals, and our company is going to go get those.
That's
and
right.
You go, okay, I understand that. I have a map. I see where you're going. I don't understand your tools, your methodologies, perhaps, and maybe those excite me. But maybe, as long as I'm confident you can do it, here's some money. Go get those precious metals. Bring them back.
That's it. Get those precious metals. No restraining orders. Let's make this thing happen in the right kind of way.
Yeah.
Yeah. So I guess like whenever I'm talking to somebody about, and you're about to face how many hundred VCs next week are going to be in the audience? 700, something like that. I don't know.
Yeah. I know that there's several thousand people going to be there, but
yeah. So you're going to be facing, you're going to stand on stage and you're going to say your truth, and you're going to say it powerfully. And over 90%, over 95% won't get it. That's right. And that means that you have to sit across the table or at a networking event where you tell people what you're doing, and they don't know the mountain range. But they want to sound smart, or they feel like they need to help, or they just enjoy the conversations. And so they begin to share their experiences and their point of view with you. And often that is probably back to that Snapchat conversation. If you would just change and you look like this, looks like blah, 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 blah. And so I think that when you talked about grit, I think it's also not just the pivot, but it's also I see this thing. I know where the gold is. I know where those precious metals are. I'm going to go dig. And you keep having to talk to people until you find those things. And it can be exhausted. Let me rephrase that. It can be exhausting to go through that if you don't know how to get those 100 meetings so that you can find the 3 term sheets.
Yeah. And the interesting thing for the founder entrepreneur is venture capitalists are not dumb people. Like, so you have to be told no by a bunch of smart people who have done big shit. Ooh. And that's
a good soundbite. That's a good soundbite.
Yeah. Well, I'm serious. I think that's what hurts more about it. Is that it's not like, oh, I pitched my uncle and he's like, I don't see it working. I'm not giving you money.
Rotary phones. Why do I need that? I got the telegram.
No, this guy, you're pitching people who are like, I have a PhD in biochemistry from Harvard, and I would love to dig in more about your brain science work.
That's right. And I've sold 2 of those companies already.
Yeah. Which is a situation that did happen to me. And like that VC passed, but that's a much tougher thing to hear.
Yeah.
And so
Wow.
I would not take it lightly when people you respect tell you no.
That's
Um,
fair. That's fair. And yet you have to stay in the game. There's a thing called mentor whiplash that we talked about way back in the day when I was entrepreneur in residence over at Clemson, and also during a couple of the accelerators I was in and was a part of. And that is smart people giving you contradicting advice.
mhm.
Oh, man, B2B is the way to go. Your product would be perfect for B2B. Thank you, Mr. Mentor. And then, oh, you know what? B2C. So I see how this can fit in there. B2B is just so much friction, and the procurement's going to eat you to pieces. You really got to go B2C. Oh, thank you, Mrs. Mentor, Miss Mentor. It's like you have to be the CEO of you and stick to your guns with imperfect data. And I just find that to be, I would love to do a study or a poll or something that shows the number of divorces that happen for founders who are raising money, venture-backed founders, and their marital status or their relationship status.
Yeah, I think if you were to do that, I think the issue is, um, at first you're very impressed as an entrepreneur that you are getting meetings,
Yes.
and the issue, even when it comes to the people around you who love and support you, is you approach them and say, "Oh, I'm on the cusp," and then you stay on the cusp, and you're perpetually on the cusp of something, and the divorces and other things come because the other people get tired before you do,
Yes, they
and
do.
they get tired of sacrificing before you're done sacrificing as an entrepreneur, and you have a clear vision and they don't. They just have some sort of faith in you, and they take it very personally when get they see somebody else, a venture capitalist, reject you, and you're their spouse, and they say,
Mm,
hey, and they look at you and they say, "You're the type of person that can be rejected by other people. Am I messing up by being with you?" And they watch that over and over and over again. Watch the people they love get rejected, and eventually it wears them out.
sure.
And I think that's an underestimated psychological relational dynamic.
Yeah.
That
Like it's burnout, man. Right. And
well, it's
so,
not burnout for the entrepreneur; it's burnout for the people that love the
yeah,
entrepreneur.
well, that's the myth, is that the entrepreneur is an island unto him or herself, right? No, this is a full contact sport that you bring your entire social circle through, and it's spouses and children and family and friends, and it's really, really important to have healthy community support you while you're going through all this, which is actually one of the things that I'm most excited about going down to Atlanta next week, is to be in a venture community. But I don't know what to expect. I don't know. Is this going to be hundreds of sharks ripping entrepreneurs to pieces? Is it going to be I don't it's
Yeah,
just a new group of humans. And that to me is always exciting.
but to your point, right there, when you show up at a space like this, like in your if you're looking for support, um, you might end up with a couple of camps. There's the people who will support you and say, keep going, right? And then there are people that believe they are supporting you by like
Hmm.
mercy killing you, right?
Mercy kill.
Yeah, they're just like, listen, old yeller, you got rabies. This thing isn't going to last. You need to hear it from me. And so, you know, that's your mentorship conflict is I've had mentors, even with Hook Security, who said, "Hey, Zach, love you, mean it. I wish somebody would have told me when I was onto a bad idea. And so I'm going to tell you, you're onto a bad
Oh,
idea."
yeah. No, never tell me I have a bad idea. All my ideas are amazing.
Well, I mean, but they see it as a mercy. They see it as them supporting you by doing that.
Hmm.
I would love to free you from Hook Security so you can go do a bigger, better company.
Oh,
And
yeah. We've heard that before.
and you say, "Oh, thank you for the offer to put me out of my misery." Right? That's a gift that you would care enough to say that.
Is,
But
is
also,
that is it a gift that you care?
I think it is. I think it is.
I
I
think
think, but I think it's easier to be apathetic and go, "Oh yeah, you do your thing,"
yeah.
right?
Yeah.
But somebody who's willing to risk conflict and actually tell you what they think, and even if it's bad
Nah,
news.
nah. I mean,
Um,
that sounds like uncomfortable emotions and feelings. I'd rather avoid
yeah.
those.
So, like, how to navigate that world as an entrepreneur psychologically and how you feel about it. I think again is an underestimated, underreported part of the journey, because what ends up happening is the entrepreneurial journey just ends up being a meme of going high, low, high, low, high, low. And what people don't appreciate is what precipitates the high and what means at the low.
Yeah.
And I called a mentor this week, an investor, who came from a sales loft background, and he told me a story years ago because I was telling him that uh, I was really struggling with how we performed in Q3 at Hook, with
Yeah.
where my expectations were and what happened, even though um, 80-90% of my expectations were met and exceeded. There were some KPIs that were below.
Yeah.
And I was saying I'm really struggling because it's that 10% miss that's crushing me here. And
Right.
he told me, he said, you know, um, I I didn't lose a lot of sleep building Sales Loft because they did do like some hard things and they pulled some all nighters, what have you. But he said there was one evening where he was going to receive an award. This is not the founder, but they were going to receive an award for like best places to work in Atlanta.
Yeah.
And while at that meeting, uh, their largest customer calls and tries to cancel. And he was sat there in that juxtaposition
Mm-hmm.
with being accepted by this room as one of the best places in a major metropolitan area to work, and being rejected by a key customer of theirs that had been with them for a long time. And
Yeah.
that conflict is where you sit.
Well, I think that's a gift that an entrepreneur needs to develop, or a muscle, is dialectical thinking, where opposites can be true at the same time, where things that seem to be opposites can be true at the same time. And being able to hold that is super important. And some people are able to do that very, very naturally. And some people have to build strata and structures inside of their own belief systems in order to really handle that. But it is a thing that entrepreneurs need to absolutely develop in order to survive. And the same thing is true on the investing side. Although what I'm finding, gosh, I've been in the investment world now for about a year and a half, and it's it's definitely not a full contact sport the way that pure entrepreneurship is when I'm building a business. What I do find is an interesting full contact sport is when anyone tries to innovate inside of capital allocation. There's a lot of people who I'm bumping into, and I don't know it's because I'm looking for them or because it's a trend, but people who are upset with the way that venture works, that they're upset with the alignments of various capital, and the conclusion I have come up with is it's back to the LP. The LP's expectation on how their money behaves dictates how venture has to operate. And we only have one thing that we can do about it, Zach. We have a moral responsibility to become obscenely wealthy and control a crap ton of money, and to then deploy it in our own way, the way that makes sense. That's going to be counterproductive, because until we change how the investment dollars work, then you just simply do not get the you're not going to get the behaviors out of the entrepreneurs and out of the markets that you're interested in. So saitheth Adam.
I think so. There are two things coming that I think I have no idea how it's going to sort itself out. But
Stephen Buckingham's Oktoberfest being the first.
Yeah. Shout out.
Woo!
Um, so you have Web3, crypto, different types of assets, transfer of assets, the ability to move and find and express value in a lot of
Mm-hmm.
different ways. That's
Mm-hmm.
all cool. But you also have baby boomers passing away, and the greatest transfer of wealth in human history is within the next 10 to 20 years. And what's interesting though, I mean, you're talking like $30 trillion. Like most of that capital is tied up in physical assets. So it's in home prices and commercial real estate. And what does that mean to intersect this new capital allocation? So part of it, the reason I bring that up, even though it's not today, is even the VCs who are on the edge today and thinking about they're frustrated with systems, they're frustrated with capital allocation, they have different ethical and moral frameworks they'd like to bring to it, they have different prerogatives they'd like to bring to it. Um, I think the ones that can find staying power in the next 10 years will have some very interesting optionality that didn't exist before. The unlocking of money and resources from real estate and the ability to transfer and move and utilize that in a Web3 environment.
Yeah, we're seeing some of that right now. Like we are seeing the younger generation that is coming up wanting to move from real estate to tech, but still having to show the kind of behaviors of that money for permission to do so. And so
Yeah, that's right. Yeah. The rules were written for the real estate world.
mhm. Yeah, so that's one of my favorite examples is the whole we went up to Kentucky to raise a bunch of money for a cybersecurity fund that was going to return money in the next 7 to 10 years. So typical VC experience, right? And everyone there said, oh my gosh, we really want to get into cyber, we really want to get into tech, we really want to get into alternative investments, but I need my money back in 2 to 5 years, and I need it to produce dividends and rent monies. And golly gee, I can't do anything lower than 8%. And I'm like, lower than 8? I was like, bro, I'm talking about da da da. And what we found is, number one, you can't make the deal too good because it breaks their belief systems on how money works. You can't tie the cash up. And so what's worked is us showing how to successfully move money from being tied up in real estate to tech and then into the bank account. So the tech is a great tool, and DeFi and all the other things, but primarily what I'm talking about is, digital economy, whatever that happens to be to you.
Yeah, that's right. And what I'm suggesting is collateralization will begin to be digital. So right now, the best collateral that anybody has is physical space and real estate, right? And banks bank on that. But imagine a world where they discount whether or not they care if you own land or have a house or anybody to collateralize, and they only care about what your how volatile and how secure your digital assets are. And that becomes the profile for your collateralization. And it's discounted. No one cares if you own 10 buildings in a downtown concentrated environment. A bank's like, okay, I mean, I'll give you a 50% loan to value on it if you want it, but that's just getting cash out. And they shrug their shoulders, right? That would be an extreme example, especially if we still have some sort of population growth. But my point is that at a larger level, the venture capitalists and the investors who are willing to wait out and endure and not get broken by the system, but somehow live within it until some of these other things materialize, they will have a chance to do whatever. I imagine the ethical frameworks will update. Right now, you have other social funds, etc., that have their prerogatives and their goals. But I think those will update in the next 10, 20 years as they always do, generation to generation,
So
and
so
it'll
let's
change.
let's pivot a little bit here, as we're coming to the end of our wonderful conversation. Um, what do you think the next 30 days are going to look like? Wave a magic wand. Describe what you are about to go through, so that who an entrepreneur listening to this can hear what does the last 30 days before a large raise coming to close looks like, because I'm assuming that it's going to happen based off of the momentum that you have. So, look at your
Yeah.
look in your crystal ball and say, hey, this is what the end of October, mid-November looks like for us.
So I'm going to say we have at Hook, there really are just two scenarios. Um,
Hmm.
and I've told you this before. We are either going to get a lead investor and a term sheet, which will be 5 term sheets,
Yep.
or we will get 0.
Right.
There's too much. We are at the 99% line with a number of VCs. And if one tips over, my real number is 4. I think if one tips over, I'll have 4 term sheets in the next 30 days.
And
Um,
and once you
if
get the term sheet, how do you decide what that looks like?
Yeah, you spend the before you sign a term sheet and go into an exclusivity period, um, you have to hurry up and find the other folks and make a decision. So you put your board and any of your other key advisors on alert, because you
Yeah.
might have to make a decision in 24, 48 hours with low information as a founder as well.
Eek.
And yeah, it's a what do they call it? Like 30-day fiance. Isn't that a
Right.
show? I think I've seen that on our
I have
TV.
not. I like your idea though. So,
And so that's the world that we're looking at. And right now, I'm just trusting all the other founders who look at our funnel and say, "Oh yeah, you're going to do this. These things are going to land." And I go, "Okay, I'll trust you." In the same way that I trusted SEO experts, that you just have to show up with valuable content for 2 years, and then
yeah.
all of a sudden it'll happen. And uh, we did that at Hook. First time we've done that. I've done that at other companies where I gave up after 3, 4, 5, 6 months because I saw nothing. But with Google, it's 0 to 100. There's no gradual increase on like domain authority and viability of your SEO and keyword first page. So yeah, they do bump over time, but like it either begins to all happen or it just doesn't happen. And if you sit there and you measure it at the first part of your funnel in the SEO.
Hmm.
So I trust the SEO experts. It panned out. I'm looking at other founders and experts and people who've raised capital, and they're looking at my pipeline and they go, "It'll pan out." And I go,
Yeah.
"Okay, I'm just trusting the process at this point, and I have no emotional attachment. I am going through the motions and I am working the funnel."
Oh man, sphincter tightening. Get her done.
Yeah. And I'm calling it. It's either going to be 4 term sheets or 0. And if we do 0, we'll manage our capital and cash,
Yeah,
and
we'll
we
keep
will.
going.
It's not. We are not. We are a default alive company.
Yep, the
So
dance will continue no matter what happens. It's I like that we have 3 different possible scenarios. The first scenario is outside capital doesn't come and we create a pretty awesome company, and try again in a year or 2. Um, or it becomes we cash flow and pivot and we find we're very smart people and I know that we'll be able to figure that out. But I like the other one. The second is there's some kind of bridge that happens and we're able to do some of the things we want to do a little faster than we would have if we were bootstrapped, and that really puts us in a really cool position. And then the last option is you get the capital and you need to move much faster and innovate much quicker because you have the resources to do it. There's no future where Hook Security isn't making an impact in the market. It's just how fast and how big.
yeah, I think that's the interesting thing. And if you define the last scenario as a failure, um, then yeah, I think um, the founders who are only into startup and go find gold in the gold rush that is entrepreneurship, they're fine.
Mhm.
Like they can do that. I'm not dumping on them. Um, but I think I started out as that type of founder, and I was like, oh, let's go find product market fit. Let's scale something up, get your exits, make the money, go get more money, what have you. And money's great, big fan, love the scoreboard of money.
Mhm.
The the thing that I've moved into though is like I think it matters at Hook that we get our work right. And that kind of deeper sense of purpose ties right in where, yeah, I can raise money and we can go do better and better things because the flywheel of capital will begin to turn for us. But if it's not now, we're not stopping because it matters
Yeah.
and we're going to go do it. I think
Yeah.
that's it.
Bam! That sounds like a place to end our conversation on. It matters, kids. So what we looked at today is kind of, I think we explored, again, it keeps coming back to the mind game, the mental journey of entrepreneurship while you're in the middle of all this. And, it's all coming to a head in the next 30 days. It's super exciting. It's also still super hard. And I think you have to be willing to let good things happen. It's really your mindset when you go to these kind of events, when you have all these high highs and low lows. And so, I don't think we have a strong call to actions here, but I do think that's
Mhm.
super curious to hear what that whole thing is like. I think next time we chat, we'll actually be at the event next week.
Mhm.
So maybe we'll do this face to face and check in live fire when you're in the middle of something and be like,
Yeah.
okay, tell me about your conversations this morning. Don't say names, but say some names. Yeah.
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 Say the names of our enemies. Let's
That's
keep
right.
our friends anonymous.
That's right. Say the names of the people you never want to work with again. Dun, dun, dun. Yeah.
Awesome.
Stu, you know who you are. Goodbye, Mr. Eikenberry. Hey, and thanks for joining us for the TSOB podcast. Find us on LinkedIn and give us your hot take. The whole reason we're doing this is to get access to better conversations that help us up our game. And if you have something you want to share, we want to hear about it. Find us on the TSOB LinkedIn group and jump in with 2 feet. We can't wait to chat.